What's up? It is the one HODLs and we are back. It is Tuesday, I believe it is. We are, I want to say, the second week of August, and the month is starting off pretty hectic. Hey man, a lot to talk about, so let's get into it. If you're stacking Bitcoin, stack responsibly. Go to a peer-to-peer decentralized exchange and avoid KYC, avoid third-party custody with HODL, link down in the description. You just sign up and you can trade Bitcoin peer-to-peer. Let me get over real quick, y'all. This is a crazy exit right here, but you know, I've been driving since 16, so there's a lot of things that I can do while on the road, which is stream and drive. I wouldn't avoid this to any rookie though. I wouldn't recommend this to any rookie. Sorry about that. So don't know why. Let's get into it, y'all. Also, one more thing. We talked about how to HODL. Check out another link down below. That link is going to be for CoinKite. CoinKite is a store, and it is a Bitcoin inspired store, and that store has a lot of good things in there. One is a cold wallet called the Cold Card Wallet, and keep your Bitcoin in cold storage, man. It's open source Bitcoin only wallet. All right, so this has been a productive day. I finished the day at work, you know, providing value so I can stack more sats, because this is the time to stack sats. This is a consolidation period. Bitcoin's chart has been trading virtually sideways for months now. So you want to be looking at when the price action is boring and has been trading in a tight range, which has been in the high 20,000s, low 30. Now, Bitcoin in the crypto market took a major hit this morning before rebounding strong. And that rebound comes on the heels of news, right, about the U.S., like almost 10 or 11 large U.S. banks that have had their credit rating downgraded by Moody's. For those who don't know, credit rating is meaning all of the liabilities, all of the leverage that has to deal with banks lending. That credit is pretty much bad debt, right? Bad debt comes from defaults a lot of times. So of course this makes sense. We all expected this with interest rates being continued to be pushed up higher and higher by the Federal Reserve in order to contract money supply and to bring on they're trying to stifle inflation. However, inflation is still positive. It's still a positive reading on the inflation rate. Anything that's a positive rate means that it is going to keep going in the positive direction or accelerating. So while inflation still accelerates, the Federal Reserve is doing its best to really bring on a recession. And the banks, of course, are going to take a hit. Now, for people, I'm working in banking right now, so you know, hey, it is what it is. I stay prepared, of course, but you know, while the opportunity is good, you got to get it. So, how interest rates affect banks is that banks are going to be lending out at a higher rate if they can lend out at a higher rate, because people are not going to be taking out loans like that and wanting to pay these high interest rates. So the lending part of banks' income is down. Now, the interest rate being raised also affects their deposit rate, which they pay out to people who deposit, and they essentially they don't even know it for the most. They become creditors to the bank. So and in return, the bank pays them interest rate. Now that interest rate, banks are going to try to pull back on that interest rate of what they pay out, because they got a nice little margin to play with. So even though interest rates are higher in your savings account, they are not as high as they possibly could be, because banks are trying to stay liquid, right? They're not bringing in enough money. They're not bringing enough money for from the lending part, and so therefore, if they're not bringing enough money, they're going to cut their expenses and not pay out that much on deposits, and that's how they try to get through with it. But they still have to be competitive with other banks who may be lending a little bit better, you know. So then it's becoming tight for banks, and their credit ratings are downgraded because people who are already holding that debt, they're not able to service that debt with these high interest rates, so they're probably defaulting. They're probably refinancing the crap out of it, and this is where bank stability becomes an issue, right? So banks can fail at this point. They can become insolvent, and so the stock market. I mean, we've seen bank stocks go down today in a major way. Bitcoin popped, and that really speaks to the aspect of Bitcoin being a bank in your pocket, right? And being its own monetary network where you could store wealth and you could actually transact all on that network at the same time, in an immutable way, right? In a secure way, a lot more secure than a bank because it's decentralized and backed by energy. So this is what we've seen today. Bitcoin popped right back up to over 29,000. I think Bitcoin goes over 30,000 in short order, possibly up to 35 in short order off of today. So the economy is doing not too well, y'all. And I hope you've been stacking sats. I know a lot of you want to stack crypto and think that it incorporates it's on its own vector, like it's on its own thing and it's not attached to any central authority. Yeah, you're smoking. Crypto is definitely attached to a central authority. There's definitely a lot of cross collateralization that we've seen unwind, but it relies on that. Crypto essentially relies on that. If there's a central entity or a central issuer, by default it does. So guys, you know, it's not the time to not be stacking sats. If you can, if you're fortunate to be able to be in a position to stack sats and to try to get as much of your fiat into something like Bitcoin as possible, definitely do it. If you need a service debt, definitely do it. Focus on income, focus on trying to survive. Again, when times get tough, you get tougher. So that's what's going on, and just wanted to check in with you and let y'all know it's Tuesday. Hope you're being productive, and at the same time, relax. Don't stress. Till next time.